Mode.
Good evening, everyone. Welcome to Admiral Markets webinar of 11th of June 2014. Today we are going to talk about Camarilla and why Camarilla is better, in my opinion, than other indicators. I will tell you a little bit about history of Camarilla, and I will show you also Camarilla historical indicator. So you will see how Camarilla can be plotted also in history, showing you all Camarilla levels in past number of days. So basically, for me, you know my method which I use, it's Camarilla MACD. It's based on Camarilla indicator. It's my main pivot point indicator. And in Camarilla MACD, I combine price action and Camarilla indicator with only one additional indicator, which is MACD, for divergence. All other things for me are basically, I don't use it, and I will tell you a few things you should know about Camarilla and few things which basically how you can trade with basic Camarilla knowledge. For Camarilla indicator, of course, if you're interested in Camarilla indicator, I can send you Camarilla intraday indicator and Camarilla historical indicator. After we finish with webinar, of course, you will send me an email and I can email you Camarilla intraday and Camarilla historical indicator. So this webinar is introduction to Camarilla. So of course, this is important stuff to know. If you ever want to use Camarilla, this should be your first step towards trading Camarilla. Before we begin, of course, our risk disclaimer, risk disclosure statement stating all the possible risks associated with Forex market. By accepting it, you are also proceeding further with me. Online educational materials are developed by Admiral Markets AS Estonia for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, me, and in no way it represents the actual suggestion for the trade. These are not AM UK's opinions, and the website in the video is not the .co.uk website, but the globalnews.com website. Forex is risky business. This is personal opinion only, and this webinar is for informational and educational purposes only. So before we start with Camarilla, I need to show you a great trade today which we had on Euro, New Zealand dollar. I hope that you have taken the trade. As you can see, the price in the moment while I was writing the analysis, it was here, and subsequently the price went here at the POC and then dropped to basically 58.10. So the first target has been hit. You could have seen that also here, and that was a great trade on Euro New Zealand today. So that is what I was going to show you, and I hope that you have taken some pips out of this analysis, because the price really got into POC and then it was 3 pips again. So Camarilla in short, we need to know a little bit of things about Camarilla. What is Camarilla? So let's say about history that although Camarilla might seem like an ordinary pivot support and resistance level indicator, some time ago, some 5 years ago, I have heard that bank traders are using these levels, Camarilla levels, to take positions. Camarilla equation first started to be popular in Standard & Poor index trading, and some time ago traders brought Camarilla to Forex market. So first, in the year of 1989, as I remember, Nick Stott, he was a successful bond trader. He basically did some equations, and he made Camarilla equation quite simply. He told us that a theory of the markets, like most time series, have a tendency to revert to the mean. So, in other words, when markets have a very wide spread between the high and low the day before, they tend to reverse and retreat back towards the previous day's close. So that theory of Nick Stott suggests that today's intraday support and resistance can be predicted using yesterday's volatility. So basically, yesterday's volatility is predicting the price for today. As you know, big banks use it, and simply put, the Camarilla equation is a price-based indicator that provides a series of support and resistance levels, much like the floor pivots indicator. So floor traders also use it. What makes this indicator unique is basically the fact that each pivot carries a specific call to action. So basically, those pivot points which are explained in Camarilla and which are held in Camarilla can be traded naked. Remember, guys, Camarilla is intraday indicator. That means that Camarilla is the indicator which is suitable for one-day trading, the trading which I do. That means today I open the position and during the day I close the position, because tomorrow's Camarilla will be different because it's a dynamic indicator which uses today's volatility to predict tomorrow's price action. So Camarilla essentially is intraday indicator. I have an indicator which is called Camarilla Historical, which can plot historical levels of Camarilla. And that is also on intraday basis. So you can see what the price is today, what the price was yesterday, then what the price was a day before yesterday, 10 days ago, and so on. The equation of Camarilla is basically it takes prior day's highs, lows, and close to determine basically 6 key levels on your charts. 3 are support levels, and basically 3 are resistance levels. Out of many pivot point indicators, for me Camarilla is the best. Not just because I use it personally, they are good, they are better, and the best. Not just because I use it personally, but it offers me great chances to enter the market differently. I will explain that later what that means. All Camarilla is color coded because it's intraday indicator and it's color coded to indicate whether you should buy or sell at certain pivot points. For me, Camarilla serves as confluence pivot point indicator. Remember, guys, I don't explain you my Camarilla MACD method today. I'm not explaining you that. Camarilla MACD is a method which is based on Camarilla pivot points. Today I'm introducing you to Camarilla, which should be your first step towards trading this great support and resistance indicator. And I will show you how you can try to trade it naked today by general Camarilla rules. So the equation, as I told you, takes prior day high, low, and close to determine 6 key levels on your charts. 3 are support levels. Those are L3, L4, and L5. And 3 resistance levels, H3, H4, and H5. All of those other indicators standard pivot point indicators, Fibonacci pivot point indicators. Last week as SR indicators. Hourly is different, meaning Murrey mat. They all do not have what Camarilla has. And that is basically intraday support and resistance levels using for trading trends, counter trends, and breakouts. So the only indicator which you can take the trends and trade the trends is Camarilla. The only indicator out of all these indicators. If you want to take trend trades, you can go with standard pivot point indicators. Trend trades it's easy, right? But again, Camarilla is better for me because those levels are more precise. By applying Camarilla, you can see how precise those levels are. Then you can go with Murrey mat pivot points, which is very close to performance compared to Camarilla pivot points. So Murrey mat pivot points are the second best after the Camarilla. Hourly pivot points are great for scalping, but nothing besides the scalping. But they are great for scalping. Last week's support resistance indicators are only valid if you are trading higher time frames. Fibonacci pivot points are more or less standard pivot point indicators, but only they have Fibonacci levels plotted in. And the only indicator which gives you breakout levels is Camarilla. The only indicator which tells you now go short is Camarilla. The only indicator which tells you now you go long is Camarilla. Okay? So let's say that if you take this is before I proceed, this is how Camarilla is basically calculated. H5 level is calculated by high divided by low times the close. H4 is equal to close plus range plus. Look at these equations, and they do work. I don't need to mention it now one after another, but you can see that it's great how it's made, really. The equation is indeed a kind of complex. It's simple, but its core is complex. As I said, because it uses yesterday's volatility to predict and give us accurate price levels for today. That is the power of Camarilla. Exploiting volatility to the maximum. And this is how equation is usually done, and how, if you trade, you should pay attention to. H4 is resistance, the ultimate resistance for the day. H5. H4 is a breakout and important resistance. H3 is usually interim resistance, which is usually broken if the price wants to trend. L3 is the support, L4 is breakout level for support, and L5 is the target of breakout. I will explain that. Now, general guidelines are, if the market opens between the H3 and L3 levels, you must wait for the price to approach either of these two levels. Whichever level it hits first, it gives us the first trade. So these are general rules. If we want a short trade, I will explain that also on the chart and give you 4 possible scenarios to trade Camarilla naked. If we want a short trade, we basically look for the price to bounce back down into H3 level again before we enter the trade. Stops are placed above H4 for short trades and below L4 for long trades. Now, if the market opens outside H3 and L3, we should wait for the market to retreat back to the L3 or H3 level as we trade with the trend. Now, I will explain you all of this. Now, pay attention, guys. This is scenario 1. This is scenario 1. Scenario 1 is when you can see the names and the labels below each line. So L3, L4, L5 are supports, H3, H4, H5 are resistance until one of it breaks. You know standard price action trading. This is considered as resistance until the price breaks through it, retests it, and closes above. That is that when H3 and all those levels above are turned from resistance to support. The opposite, but the same thing, is for support. This is considered as support until the price breaks through it, retests it, and closes below. Then L3 becomes resistance, and so on for H and L5. But the main and general rule is that usually the price will open between H3 and L3. The price will usually open here. Now, this is scenario 1. For long trade, you need to wait for the price to go below L3 level, and then when it moves back above L3 buy. Stop loss is below L4. So if the price, look at this example. This is a good example. This was the breakout and this was the retest. And the candle was closed here. The candle was closed here at this point. And you see, so this is if L3 is broken to the downside. So if you want to buy, for the scenario 1, if you want to buy, price needs, look at this candle, it closes below, but if it closed here, you could have bought towards pivot point and H3. So scenario 1 is telling us, wait for the price to go below, as in this case, and then it needs to move back, closing above L3. Once it closes back above L3, buy. Stop loss is here, just below L4, and targets are pivot point and H3. So remember, guys, this is scenario 1 for Camarilla. Okay? Now, let's move to scenario 2. Open price is between H3 and H4. For long trade, you need to wait for the price basically to move, because if the price opens up below H3 and H4, we consider the market to be bullish, right? Now, when price moves above H4, you should buy. So this is scenario 2. Price is has opened in between H3 and H4. Those are green lines, so it indicates that the trend on 1 hour is bullish. For that time frame, you need to wait for the price to touch, to break through H4. That is second scenario. It needs to break above H4, and then you put stop loss here, targeting H5. That is scenario 2. Then we have scenario 3. Oh, I have some problems with PowerPoint presentation. Let's wait. I don't know why is this happening. Yeah, it has stuck. The screen has frozen. Let me try to fix this. I will pause the screen, but I will be with you. I don't know why the screen has paused. I will try to restore it. I hope this isn't a serious problem with, let me see, PowerPoint. Okay, and now I will open it again. So we are currently at scenario 2. Let me see. Yeah, it works again. Excellent. It works again. It was a temporary problem. So scenario 2. It's easy, okay? Scenario 2. So I explained this scenario 2. Now we move on to scenario 3. Scenario 3 is when the price goes, usually the price will open at L3 and H3. You need to know that. If the price is above H3 and H4, this is bullish. If the price is below, between L3 and L4, that is bearish. So if open price is between L3 and L4, you need to buy only if the price moves above and closes above L3. This is if the price moves from this region above L3. Then stop loss should be basically just below L4. For short entry, basically the price needs to go below this level. That is breakout trade, and then once it breaks, retests, target is L5. Okay, so that is the third scenario. And we have final fourth scenario for Camarilla is the open price is outside of H4 and L4, so in between H4 and H5 or L4 and L5. If the price, this is, you see what the power of Camarilla is. If you see that the price is here, you will wait for the retracement. If you see that the price is there, you will wait for the retracement. Why? It's simple, because you need retracement to sell and you need retracement to buy if you want to go with trend trades. So you need to wait for the price to get back into the range and trade accordingly. This is the real power of Camarilla. It gives you basically the trend. It gives you counter trend setups, and breakout setups. Now this is the picture of Camarilla historical indicator. Camarilla historical indicator will plot historically levels which were used a day before, yesterday, 10 days ago, 20 days ago. So these are today's Camarilla levels. This was yesterday level, this was a day before yesterday, this was 3 days ago, 4 days, 5, 6 days ago. So this Camarilla historical indicator plots all Camarilla levels through history. And this is Camarilla intraday indicator. The power of Camarilla is just great. Now, general rules for Camarilla. Trend trades are taken on support or resistance. So we need, and probably, as I said 2 minutes ago, we buy close to pivot point L3, L4, and L5. Targeting L4 and L5. We sell close to pivot point H3, H4, and targeting H5. Trend trades are always sell into rallies, buy into dips. So, I will go through these scenarios once more before I proceed to the next slide. So pay attention again. Scenario 1, the most common scenario. Price is between H3 and L3. For long trade, you need to wait for the price to go below L3 and then close above L3. You buy it. Stop loss is just below this region. Target is this, and the second target is this. Scenario 2. And let me tell you about short trade. This is for long trade, okay? This is for long trade. How you would trade short? Again, Simple. Wait for the price to go above H3, and then when it closes below H3, you sell. Stop loss is here, targets are there and there, okay? Simple, right? Scenario 2 is when the open price is between H3 and H4. Long trade, price needs to move above this region. We then buy, placing our stop loss here, targeting this region. Okay? Scenario 3 is open price is between L3 and L4. For long trade, when the price moves above L3, you buy. So when the price moves above L3, you buy. Stop loss is there, target is pivot point and H3. For short trade, basically when the price goes below this level, we sell, placing our stops there, targeting this region. Okay? Simple, right? And scenario 4 is if the price is outside of H4, somewhere in between H4 and H5, or L4 and L5, we need to wait for the price to get back into the range and trade accordingly, okay? Using previous 3 scenarios. If the price is too high or too low. And historical indicator plots historical levels for past days. Now, general rules are this. Always trend trades, remember guys, always trend trades are always taken as sell into rallies and buy into dips. Those are standard trend trades, and those trend trades are always, remember, it doesn't matter if you trade Camarilla or not. But tell me now logically, if the price is there, would you sell it? Really, would you sell it here? I would never sell it there. I would never ever sell it there. I would wait for the price to get back. On my Camarilla MACD, I find the confluence points. Back into confluence zone and then sell. Or you can use these scenarios for starters to see how it works. Use this. This is Camarilla. And it tells you now it's below L5. Don't sell it. Wait for the price to retrace, then sell. Okay? This is also a cue, a signal for you that the price has indeed come too low to sell or too high to buy. And now it doesn't matter if you don't use Camarilla. Remember, trend trades always are wait for sell into rally or buy, wait for buy into dip. This is how trend trades are taken. Whoever tells you otherwise, it's stupid. Breakout trades are done from this region and from this region. But if the price is somewhere there or there, of course you won't trade it because the breakout has already happened. Now you remember what I'm saying. If the price is there or there, that means that the breakout is already happening and you are too late for entry. So trading is about patience. If you want to be successful in trading, you need to be patient. If you are not patient enough, then you will be in a problem. All my clients, when they want to learn Camarilla MACD, I always show them my history and real account statements. I don't know if there is any mentor or teacher who is eager to show you real time and real account history. I know what I'm doing, and I know what I'm showing you, and I'm always ready to prove it. So this is, all of those webinars are not telltales. Everything is backed up by charts and by my knowledge, which I extensively have been collecting through all these years. I will answer your questions just a bit later. This is simple indicator. Look at this indicator. This is simple pivot point indicator. And now compare this indicator to the Camarilla. It tells you nothing. It tells you only support levels, S1, S2, S3, S4, pivot point, R1, R2, R3, R4. But that you don't need indicator for this. You can do it manually. This is support because you see 1, 2, I cannot draw nicely here, but if you put your trend line this, you will know that this is support because you see how many times price has reacted to this level. This is resistance clearly because this is a swing high. This is resistance clearly because it was also swing high. This is support because it's a swing low. So you don't need this standard indicator to show you all of these things. I know for most of you are probably new traders, newbie traders. And probably most of you, you know, it's not easy to spot if you're a new trader this or this or this, because many new traders do not know what swing is, let alone to mark historically important levels on their charts. So it's always easier to use standard pivot point indicator. This is standard pivot point indicator. Pivot point, resistance levels, support zones, support levels. What about that? It's nothing unusual. Okay, it's good. But Camarilla is best. This indicator does not tell you what Camarilla tells you. 4 possible scenarios to trade. But don't get me wrong. These indicators are very useful if you have a system which actually uses those indicators. For the purpose what I've been doing, they're not enough. But for the purpose of other methods and other systems, possibly this indicator is excellent. Because you know, there are many different methods. Let's say that you have a, I don't know, for example, stochastic cross, and you see that price has crossed there, stochastic is below 20 level, and you see that this is support. It's clearly that you will place your stop here and you enter your long order there. It's great if you use it in a system. But for the general knowledge, for the general rule set and general mind of a trader, plotting simple pivot points is not enough. And it's okay if you are new traders, this is again your first step towards full development or full-fledged trader. One of later webinars, I think it's scheduled in July, me and Chris will talk about ourselves and basically how we became from newbie traders to full-fledged, full-time traders. When I saw this indicator first time, I was also, oh great, this is excellent. I was, you know, hyped to the maximum. today I can do it by my naked eye. I just need to look at the chart to know where to put these lines. This is so simple for me. And I want you to be also, I want that to be simple for you. That is because that is why we have these webinars. I want you to be full-fledged trader. Not a simple trader which only trades euro-dollar. I want you to become a trader which can trade 25 pairs, 24 pairs. Whatever it is up to, you need to trade. Whatever you're up to against you, you need to defend. You need to battle. You need to win. And that is why I'm teaching you how to do that. Telling you secrets which are not found on the internet. Telling you some things which many other traders won't tell you. So don't get me wrong again. This is Camarilla, and these are most of other pivot point tools. This can be good, and this is good in some methods, which are basically which are basing their trades on support resistance zones. This is general. Camarilla is the method in itself. Okay? Floor traders use it. Camarilla pivot points are intraday pivots. So you can use it each single day. Each single day you can use Camarilla indicator. 3 different trading styles. You can trade trend, you can trade counter trend, you can trade breakout. You can trade counter trend at these lines, H3, H4. Once the price goes to H5, if your system allows it, you can take short trade. L3, L4 are trend trades for long trades. L5 is a target if L4 breaks to the downside. And counter trend setups, excellent things. Divergence around these zones coupled with few other confirmations, and you are ready to trade counter trend. Hard to achieve with these kind of indicators because you're not sure which of these levels are more important. Is R2 or R3 more? Which is the most important support? Where will the price go once it breaks through R1? You don't know that. When will the price go when it breaks S2? It's more simple. By using these 4 scenarios, it's more simple, guys. Because each of these Camarilla scenarios tells you what you can do with the price. So it's the indicator and the system in itself. It can be traded by itself. If you want to use it as a pivot point indicator, it's great because you will see very often that the price will indeed touch one of those levels and then it will act accordingly. When it touches L3, usually the price, look at this, this is simple. The price went here, 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 look, it went below, but it failed to close below and close there. This is long, and you see long. Price failed to close above H4, then it went down. Look at this, price closed below H3 short, it went down. In this point, the price closed above L3, touched the pivot point, reversed to L4, then break out. Look, this is indecision candle. Look how price is perfectly following Camarilla. This is called spinning top, and this is indecision candle. Look where indecision was. it was around L4, because if it breaks L4, it will proceed to L5. And it happened. Breakout, pullback, continuation. So you cannot know that using this. But applying a common sense and 4 strategies how to trade Camarilla naked, you can basically try any of those strategies which I was showing you. History backtest. You can go and backtest these pivot points in history. H3, H4, H5, pivot point L3, L4, L5. Okay? L3, L4, L5, pivot point H3, H4, H5. So good, right? And of course, if you're interested, I will send you Camarilla historical and Camarilla intraday indicator. No problems with that. Now the questions. Opening of the price means, do we need to look at the previous day's levels? Because for present day, every time it opens, it's between L3 and H3. No, you just need to watch current price action. So, the answer to your question is, you don't need to look at previous day's levels. This is for today. These are levels for today. Tomorrow, when you wake up, you will see other levels. So you don't need to look back. This is only for history, to see how the indicator behaved in history. But intraday pivot points are for today. Tomorrow it will be different. A day after tomorrow will be different. So each time Camarilla plots those levels, they will be different. Which time frame could be used? I use it only on H1. They can be used on other time frames. Sometimes I make analysis on H4, but for 1 hour time frame they're optimized. It's optimal. Yes, optimal time frame is 1 hour, guys. So that is the optimal time frame. Yeah, this is what I was showing you. And now, guys, print screen this. This is scenario 1, 2, 3, and 4, which I was explaining. Now, print this out, because I will be sending you Camarilla indicator if you want, and try one of these scenarios. Watch how price behaved in all these scenarios through history, and incorporate that into your knowledge. Okay? Next question. So best time to enter a trade is in the morning. Of course, as the levels for tomorrow change, it's no use to enter now. Well, you can enter, not now, because now it's 6:45, right? It's too late for intraday positions. Best time to trade is the first 3 hours of each session. First 3 hours of London, first 3 hours New York, first 3 hours of Asia. Levels for tomorrow will change. And if the price didn't make a, I don't know, 120% of ATR, more of the or the less, they will be close to each other. Okay? If you have any question, when you say it, it's logical. When I say it in my head, I always doubt. You know why is that, Yves? You doubt because you are still not sure what to trade. You are afraid to trade. There will always be some doubt, you know. But you know how I enter the trades. I'm totally cool when I enter the trade. I just place my trade, place my stop loss, and I'm cool. Because I know that if I lose, I won't lose much. And it's usually 70–80% of the time it's win. But in other 30%, if I lose, it doesn't matter. Because I won't lose much. I will lose so much that I can easily get it back during the day or during tomorrow. That is risk management. That is money management. That is not a trading system, a trading method. You don't doubt in your trading method. You probably doubt in your head. Or you don't have a trading system or method which is clear. That is why you have doubts. You need to work about your system, money management, and your psychology. So don't be doubtful. Follow my charts, follow my analysis, and if you agree with it, and if your method system agrees with it, enter the trade. Why not? Yeah, no problem. So guys, this is everything I was trying to tell you about Camarilla, and I was planning to tell you about Camarilla. This is the first step towards potentially one day you will, I don't know, you will use your method, or you will know which method to use. But whichever method you use, you will see that plotting these levels only as standard pivot points. You don't need to trade scenarios 3, 1, 2. You don't need to trade Camarilla scenarios. But only having those on your charts will help you a lot, guys. Believe me, it will help you a lot. Because these are intraday levels which are perfect. They are very precise. And the price will always have some action around these levels. Even though if you don't want to trade Camarilla MACD, which I teach and I trade, even if you don't want to trade Camarilla in these 4 scenarios, just plot it on your charts. Plot it on your system to see how the price will react each day to these levels. And you can also see that in history. This is historical indicator, and I will send you that, no problem. So guys, of course, as always, read through this analysis. It will help you a lot. What did I tell you about euro dollar today? If it goes through 35.50, it will go up above to 35.85. You saw that that was basically the price was rejecting from 35.50, and basically there was no close above 35.50. And look at this. This is inverted head and shoulders making, and watch the price. This is bullish divergence only if it breaks here through these zones. 34.85.90 will come probably. And you see the power of Camarilla here again. Divergence, L3, bang. Okay. So guys, thank you for listening to me. Always, I'm very glad to have you on my webinars. You can, as always, sign up for future webinars. This session recap gave us initially 2 trades. Yesterday, euro dollar was -30 and the Swiss yen was +75. So if you traded both of those currencies, you could have got +45 pips. So again, Forex weekly recap was great. If you don't know what my email is, I will show you now. tarantulafx@gmail.com. Tomorrow, scaling in our trading plan, that will be with Chris, and our mutual webinar, which news to trade and how to trade it. And then, of course, weekly Forex recap. So sign up for those. I'm waiting for you. And if you're interested, of course, in Camarilla, you can email me. I will send it to you. Thank you guys for listening to me. I'll be here again soon. And if you don't have any further questions, I wish you many, many green pips. Now, guys, it's the end of the day. Relax, go out for a drink, go with your wives, husbands, friends, with your children. Enjoy the rest of the day. Thank you, and talk to you soon. Cheers.